it's relatively easy. I think for all of my transactions, like say 14, 15,000 transactions, I think I paid maybe 50 or $60 to report it, and get it all consolidated. So, in some cases, the lower cost options I would prefer, even though they're not super sexy. So, anyways, just wanted to share a few resources. Again, there are other ones, but I would highly suggest, being careful how many transactions you make, because you're going to be paying a lot on the back end to record and track all the cost basis on that through some sort of service provider. With that being said, I think that is a very high level consolidated view of kind of the tax landscape currently. Max and I have talked about this a lot, and we just kind of wanted to open up for discussion, any and all questions. We could talk about crypto mining. One example of crypto mining is, if you just do this as your own without an LLC, you're screwed. You should make an LLC immediately, because if you mine crypto, you can't actually account for any of your equipment, electricity, your workspace, any of that stuff. Is actually considered a hobby unless you have an LLC. So, if you're mining, it's maybe $100, $200 to get an LLC. It would probably behoove you to get an LLC, because then you can, deduct quite a bit of your expenses against your whatever mining income that you get. And I believe Super had just mentioned it's the most profitable it's ever been to mine. Is that what you said, Super? I think that's what he mentioned.
Yeah, I can speak for that. I do a little bit of mining, and my question is, the mining pools don't ask you for any information, so those mining rewards are basically non-KYC Bitcoin.
So you're saying the mining, when you receive funds from the mining pool?
Correct.
So it depends. Here's the thing: what platform are you using for those mining pools? Would be my first question, right? And if you're not reporting it, generally what I could see with these analytics companies, they're tying all transactions to multiple wallets, right? They know who you are, they know what your wallet transactions are, and especially when you cash out. So maybe you could get away with it at the front end, right? But they've clearly stated that those liquidity pools are taxable events. If at any point you cash out in any way, shape, or form, that's all going to be traced on chain. So, to answer your question, it's by law, it's a taxable event. You could try and do.
I what you're saying, and I agree that by the law and by the rules, it is a taxable event. I'm just saying that, that they don't really, it's non-KYC. They don't collect your information. So if they don't collect that information and it goes into, I don't know, let's say a cold wallet, and the only time that they would really be aware of that you own that KYC, that you own that Bitcoin, is if you tried to trade it on a centralized exchange.
Yeah, that is correct. Yeah, I mean, there's really, unless they knew who you were and they were actually specific, which probably would be a low case if you're, not a giant, huge liquidity pool or a mining operation. They're probably not tracking you, right? They're probably tracking a higher value. But it goes back to the point, if you're just using everything crypto to crypto and you're not using any exchanges and you're not having any transparency in that regards, you're on chain specifically. Yeah, I don't know if they would ever know. Maybe eventually they're trying to pull this data together, but I'm not 100% sure how they would handle that. But yeah, it's a fair point. I would agree.
Yeah, I think the high level on all this is, if you want to do these things right, we'll have the presentation here and then go to Q&A and getting more into the details. But I think the point of what you're trying to get across is, if you're a big enough player and if you're actually moving a lot of things like what you have done, you better disclose, or else you will get a knock at the door. But pretty much at the end of the day, as it says right at the bottom, non-taxable events, the best strategy to mitigate this entire presentation is to buy and hold. And from there, use your liquidity and borrow against that position, because loaning against taking a loan against any collateral such as Bitcoin could potentially be a tax deductible event. You could deduct the interest. So it seems like there is literally no way around this except to just buy and hold. If you do anything else in the official stamp of approval to say, hey, I sent Bitcoin from my friend's wallet or from my phone wallet to my cold wallet, how do I report that?
Yeah.
It seems so convoluted and so into the nuance. That's why I wanted to make it as short as I can. And thank you, Zach, for doing such a great job at that. And then now we can get into like the nuances of those types of, questions of, I mean, like we already, Super did an excellent presentation many times on Bitcoin privacy. So I can pretty much assure you we can move the UTXOs around and really mud up Chainalysis, analyzing that. But if you have cuck money, like you bought it on Coinbase, you threw it on your ledger, and then 2 years later you threw it back on Coinbase and you sold it, they know about it. I guarantee you they know about it. So the best strategy, in my opinion, buy and hold. Hodl strong, people.
So I apologize for not speaking up earlier when I was called upon. I had the phone on mute, and the computer one, the microphone that's the one with the terrible bandwidth. So but thank you for your presentation. That was excellent. I thought you did a really good job outlining all of the outlining everything. So thank you so much for coming and doing that presentation for us.
Yes, thank you again, Zach.
Oh yeah. I'll back that up too. That was a good presentation, very informational.
Anybody have any questions? Please feel free to roll it away. I'm still recording, but if anybody wants to stop, just let me know and we can. But I'm going to pull my video back up, and feel free to ask. Fire away at questions. I know I personally have some. I've asked questions kind of for you, Rick, in anticipation, for things that we're doing and we're thinking about. Same thing for you, Super. So again, feel free, anybody, jump in.
Hey, Zach, I got a question for you. I wanted to know about if you were selling stuff, goods, services, whatever, and you were accepting crypto, and you took a let's say Bitcoin, and you took a Bitcoin payment for something. Is the income you're reporting on that transaction? Because I mean, it's you sold something. Are you reporting that at the basis level of Bitcoin on the day you did that transaction at the day and time?
Yeah, that's correct. As soon as you receive, I guess, timestamped, right? It's when it's received. When you do a chain analysis, that is when at that specific time, like if you use CoinGecko or something like that, whatever at that timestamp the value of Bitcoin is, that is what you received. That's correct.
If Bitcoin were, say, $1 and you sold something that was $5, so at the time you sold it, you got 5 Bitcoins, you're reporting it was $5, right?
Yeah. And if it's at $40,000 and you use that Bitcoin to buy something, or if you sell that Bitcoin, you pay the delta, the capital gains. So $1 minus the 40,000, you're at 39,999. Yeah.
Okay.
Yep.
But again, it goes back to, I don't mean to interrupt anybody's questions, but it just goes back to what Rick and I talked about, Super, and everybody else here, Eric and, Zach and myself included. It's just so clustered. It's so convoluted. How on earth do you track every single transaction? Like, are they tracking Lightning transactions? Like, do they know? Like, can they see my private channels that I have open? How do I go through and like I bought stuff with Lightning through private channels? How do I account for that? If nobody can see it, how do I account for that?
Yeah,
your node has
a good question
of your purchases.
That's true. Thank you. The node does have a record, but I would have to disclose, my node ID to them so they could look at. Well, actually, I just have to download it.
No, Only if they audit you and then they ask you for your transaction logs, you would need to provide your transaction logs. You wouldn't necessarily, or you wouldn't need to provide your node ID unless they had some sort of subpoena that said you have to give that. But I don't think they would. They would want to. They want a spreadsheet, not a node ID. They want to see when did you spend and how much did you spend. So yeah, but your node has that information. It has a timestamp of all your Lightning transactions. So that's where you would get that. Yeah, I've done that because I did a full year using Bitcoin as my only method of payment for stuff, and most of that was Lightning. So I got the spreadsheet out and took notes of when I made each purchase on every McDonald's or Burger King that I ate. So
wow.
Yeah, that's one of the things I wanted to ask about though. What I did when I did that year, I used estimates, and I talked with well, I don't know about professionals. I talked with my mom, who's an accountant, about it, and she said, "Yeah, estimating that stuff is fine." Because I just said, "Okay, I spent $300 this month in Bitcoins. So what was the average price of Bitcoins during this month?" And then I took that and said, okay, that's my cost basis. And the next month I took whatever the average price was there. And if I assume I sold $300 worth during that time, I took the price at the beginning of the month and then the price at the end of the month, or price at the average of the month, and then the price at the average of the next month, and use those as my cost basis, followed by my cost or my gains if I gained during that month, or my loss if I lost during that month, and just tallied it up that way. Do you have any thoughts? And I looked at the law to see if that was okay. My accountant mother, who does taxes for a living, said that estimating estimating large volume trades on a monthly basis is common. And she said instead of having to do like every second, if you were trading every second each time you sold or bought, which of those it was, she says they use estimates. No one tracks the individual transactions. They use a monthly basis. And then the other thing that she said was, or that I noticed, is that the law doesn't say where your, or it doesn't make you swear that the information you're writing in is precise. It only makes you swear or affirm. So only swear or affirm that the amounts you're reporting are accurate. And so I felt that allowed me to enough security to get away with saying, yeah, I'm honestly putting down what my cost basis was based on averages of the month. And that's worked out for me well so far. I've done that for a couple of years now, and I plan to do it again this year. But I'd wondered if you had any thoughts on that. And that's my question.
It's actually a really good question. I have buddies that have been in this for a long time, and they had paid taxes that were like six figures. That's a lot. It's a lot of money. It's crazy. To answer your question, yeah, I'm pretty sure you can do that. I obviously talked to a tax professional. Obviously, your mom's a tax professional. I think what's happening now, though, especially with these Bitcoin tracking, on-chain tracking, and basically what you can do is import in your data, your transactions, right? Because you have all those transactions, and you could probably get them out in some sort of file, right, on Lightning. Like you could probably download those transactions, correct?
Yeah, you can download
your Lightning keeps track of all your.
So, I'm sorry, I'm getting some lag. Keep going. I apologize.
I was going to say that there are some nuances there. Like for me, one of the things I like to do is test out a lot of wallets. And so one of my habits, a bad habit when it comes to tax season, is I download a wallet, I use it, and then I delete the private keys and delete all the information and throw it away, and I don't have that information anymore. And I do that probably 6 or 7 times a year, trying out different wallets and then deleting them. So I lose that information, and then come tax season, all I can do is estimate what I think I did, based on my attempts to remember.
Yeah. So I guess I'll try and answer your question the best that I can based off my experience. I load everything into whatever software. Like for my case, it's Bitcoin tax, right? And it's in different CSV formats. Every exchange has a different format. Every wallet, a Mu wallet, whatever I have, whatever transactions, you can load those in, because each of these, like cointracker.com, all these different places, they actually, know all these different exchanges or ways to transact. They're experts in all of those fields. So you can load that data in and they will actually get your cost basis at that specific time for every single transaction. Now, I think you could do it, right? You could do it like you did monthly. But if you're audited, on a monthly scale and most, or I guess most equity markets or whatever, you won't see a huge swing. I think in Bitcoin, you see some relatively large swings. From an averaging standpoint, I probably would talk to a tax professional, but you can get granular. And my personality is I just like to see everything as it is. And it's relatively quick. I mean, it's not like it takes forever. I just download all the files, I consolidate them, and the software calculates everything. And then I go back through and check the data integrity on those transactions. And I do leverage trades too. This may not be applicable to everybody, but I want to make sure that everything adds up based off of what I had imagined in my head and in my mind. And I do some, I would say data grooming. I'll export it and I'll run pivot tables on it to make sure everything makes sense. And sometimes I'll find gaps, and I'll manually fix them myself. But for my peace of mind, I do it. If I have 15,000 trades or 15,000 transfers from different wallets combined, I want to know where all that is, and you can do that. So my answer would be I opt on the total detail just because I don't want to have to go back and explain it later. But if your tax professional says, a monthly average is okay, I don't see why there would be any problem with that, especially if you're filing with a tax professional and they're, you get audited and they would do it on your behalf. That's even a better scenario, right? But I don't know if I would want to.
That's the first year I did my Bitcoin taxes. That's how I did it. I took in all the forms with all the information, and then my mother, went through and did it all. And then the next year I did it myself, so that it's worked out. I mean, I haven't got any knocks at the door, and I probably won't because, I'm one of the ones who's being honest and is really reporting their stuff. Whereas the ones who they're going to go after are probably the high volume people who don't report.
That's correct. Yeah.
That's because you're my guy.
What I can do is I can say good job to you.
But yeah, seriously, because there's bigger fish to fry and there's limited resources. So yeah, just do the best you can and keep going.
Yeah, what I would say too, obviously you're putting your best effort forward, right? That's kind of what they ask you to do. Do in good faith, do the best that you can, right? And if it comes out later, you get audited and you're off by a few bucks, I don't think it's going to be that big of a deal. So, the stress level for you is hardly anything, but for somebody who hasn't reported for 5 or 6 years, there's so much data out there now, and they're partnering with some top tier analytics companies. And if you have interfaced with any exchange that has had interaction with the IRS, they know, if you went off your Coinbase wallet into your private wallet, they know that transaction. So, I mean, if you haven't filed, I think that's more the issue. Unlike you and myself or Max or whoever that has actually filed, but I know they're building an enforcement case. And I think that's going to be, in the next 3 years, 2 to 3 years, I think it's going to be I wouldn't say a huge hit, but a pretty big hit on the crypto community as in whole and in large. Because I've talked to a lot of crypto people that haven't done anything, that don't even think crypto to crypto transactions are a taxable event. These are people that have done it for a long time. And I didn't know that, or, it just doesn't make any sense because it's been clearly outlined for a very long time. And my answer to those people is, well, if you don't like it, leave the country. Max and I talk about that all the time. Maybe you just got to leave, because, the US crypto is a threat to money velocity and money supply, right? The IRS wants to control money velocity. That's why they're voting on and launching a digital dollar. And that's why the digital yuan is in existence. They want to have traceability. So if you fall outside of that category, I don't think it's going to be viewed very positively. And I think there's some major hurdles. You have Dalio and Chris Cole and Mike Green, a lot of economists that say as soon as Bitcoin potentially gets material, we're going to face a lot of headwinds. It's tough. And like
there are
Max,
jurisdictions of the United States that have nicer or more generous capital gains things. Unfortunately, they also have terrible bandwidth, and you end up having to use two devices in order to connect to a meetup. But
I would agree with that. Yes, there are ways around it. To your point, yeah. But it's a great question. I honestly, I applaud you, man. I'm glad that you're doing your best foot forward. I think it's very honorable, because it's important. If you decide to live in a jurisdiction,
best foot forward minus the part where I'm like, yeah, I'm going to throw away this wallet that has all the data.
Yeah. That is a bad habit.
Like, I just tried this out. I don't like it. We'll dump those and move those keys. But yeah,
well, a lot of these experimental wallets also don't offer an easy way to export your data. Like, I mean, if I download a phone wallet and the only transaction record is on the home screen where it says, here's your last 10 transactions, that's not as helpful, like that even if the wallet you're using isn't keeping a record, then what do? Do you just say, oh, well, I'm not going to use that wallet?
Yeah, exactly.
I guess that would be that's what they would want. That would be ideal. But but then again, I fall back on, you're not required to keep precise records. You're required to keep accurate records. And if you're making a good faith effort to estimate what you did, and you're not trying to fudge the numbers, you're being consistent about your method. Okay, so another question I had is, you mentioned that you are required to tell or record or report when you move your Bitcoin from one address to another. What form what would I Google or search for in order to find what form to put that on? Because I didn't know I had to do that. And
so you actually, I think you have to keep record of it when you submit your taxes. I think you can opt to put like what is it? There's like a bottom line number that you put on your taxes, but you have to have a record of all your transactions. I believe, what's the current form? Is it 10? There's a whole bunch of forms, and it's not, a lot of tax professionals are frustrated about this because there's not one consolidated crypto form right now. But isn't the 1099, isn't that typically where you can declare, isn't that like an investment portion of tax?
That's what I used to declare my my cost basis, the amount that I spent in each month, and then what the capital gain or loss was during that month. I reported it on a 1099 form. I think one of the things that came with that form was like I think it was something, I don't remember clearly, but it was something like optional extra information that might be helpful. And maybe that would be a good place to say, I also moved my Bitcoin from here to here.
Yeah. So really what you need to do is you need to let them know that you had transfers, right? Well, so the first question is, did you receive or purchase any crypto during this year, right? There's just going to be a general question. I don't know exactly how it's phrased on 2020 yet, because I'm still calculating my data. But at the end of the day, you'll answer yes if you interacted with crypto during that time frame. And like you said, you have to have that data on file to know the cost basis. You can do a bottom line number on your tax form, but if you get like my printout for bitcoin.tax is just like, it's immense, it's huge, and it has everything, granulated detail of how I got to my bottom line number. I need to have that. And I need to, for that software to work, I need to have my wallet transactions to calculate the, off of an exchange I'm talking about. I need to know what my base cost basis is for stuff that was never, or at least at that time, hadn't been purchased during that year on an exchange, right? So I need to have that data loaded in. Luckily for bitcoin.tax, as they roll over I don't have to go back and input in 2018's data. My starting point is 2018, and anything that happened in 2019, it references back and ties back all those transactions and all the chain analysis. So that's the benefit of using these tax softwares year after year, is you have a clean starting point. As long as you have a clean starting point, it's really easy to do taxes the following year. But in that regards, I know where all of my Bitcoin or altcoins are going to and from. and I have that data available. I let the government know I did do this, and this is how I got to the number. But if you need a full detail of the transaction history, I have it. And I think that's the real benefit of a lot of these service providers, is they do a really good job of consolidating and organizing that data. And for me, it's only like 50, $60. I have a lot more peace of mind in that regards.
Like to jump in when you're done.
Yeah, I have nothing else. Yeah.
Okay. I guess I'll ask a few questions here. When I purchased the Bitcoins, I did sell 2 of them back in 2016. And, I told my tax person at the time, and we recorded the capital gains on the 2 Bitcoin that I sold. Everything was fine. Up to this point, I've never reported. I had purchased on the exchange Coinbase, and I moved them over to my hard wallet. I have to look up the date on that, and that of course was never divulged to the IRS. And what I was wondering is back when the hard fork happened with the Bitcoin Cash, I've asked my tax guy a couple of times, if that should have been reported, and he said no. We could just start with those 2 questions.
Yeah, so he's wrong. It should have been reported. And if you got audited, you'd probably have some sort of penalty to pay against it. Unless you could work out some sort of forgiveness, like, because you didn't have that information, you could probably work something out. I'm not saying that you will be audited, but you could make an amendment to your taxes and pay that now. And I'm sure that they would probably honor your integrity on that, because I think it was 2019. Did I put that on the list? They kind of provided further guidance on hard forks and everything. So, you could go back and say, yeah, I know you guys talked about it in 2014, but I talked to a tax professional. They gave me advice. And generally, this is what I find, is there aren't a lot of tax professionals that are super proficient in certain areas in the US. I'm not saying that all tax professionals are not proficient. I'm saying certain regions just don't have a lot of crypto people in it, right? And I would say Toledo may be one of them. I mean, it's not super popular. So I didn't find any tax accountants that really knew anything about it, right? So, you did your due diligence, but technically, yeah, that's whatever you had from that token. That's at that point in time that you received it. That's when you would be taxed. I don't know what that was worth at the time, though. I'm not sure. But
yeah,
it would be your tax bracket.
Yeah, I'm in a very low tax bracket, and like I said, there wasn't a lot of Bitcoin Cash that was generated on the hard fork from what I owned at the time. So I just want to get this. It's been on my mind. I've like I said, I've gone a couple years in a row. I think I've asked about this. Now this gentleman's retired. Another CPA has purchased the tax records in the business. So this year, I keep letting them know every year that I own Bitcoin, but they never come back and ask me any questions about it. So thankfully, with your presentation, now I've got some ammunition to go back to them and talk to them about it. I just wanted to make sure. So possibly the 1099 is where you would make at the bottom where you tell them, well, we're gonna have to wait and see what the 2020 form looks like to let them know you moved it to the wallet, right?
Yeah, and honestly, I mean, that's not gonna. This is the thing. They want to have that information, the wallet to wallet transfers, because they need some sort of cost basis when and if you pull money out, right? So really, it becomes an issue when you can't trace back to, let's say that you transferred that Bitcoin to Coinbase, you sold it and then transferred it to your bank. They need to know the cost basis. And the only way they can do that is by time stamping it, right? So right. I don't think you would run into any issue until you decided to sell, whatever Bitcoin Cash or whatever it was. But as long as you're trying to be honest, I think you'll be okay.
Can I jump in here real quick?
I was just wondering too, do you know if there was any hard forks for Ethereum? Ever since this whole tax thing came about, I kind of really have kind of put the whole thing under the rug. I haven't even logged into Coinbase for a couple of years, to be very honest with you.
Good. Keep it that way, Mike. Stay far away.
Well, I haven't purchased any though either, though. That's a bad thing. But I'm just kind of a hodler. Do you know if Ethereum actually had any hard forks also?
Max, so from my understanding, it's proof of stake, right? So does Ethereum actually hard fork? Or I guess there's F2.
Proof of work.
What is that?
Ethereum is still proof of work.
Is it proof of work?
Yeah, I was gonna say the only thing that I heard, I don't keep up with any of that stuff. I'm a maxi, we all know that, but I don't believe that they're 2.0. I know they released it like in December 29th of last year or whatever, so they could claim 2020, but I don't think anything has happened since the 2016 split between Ethereum original, Ethereum Classic, and whatever shitcoin that they're running right now. So I don't believe anything has happened since like February of 2016 or whenever the DAO hack happened. I think it was April. Or I'm sorry, no.
Tron was a fork of Ethereum.
What was it really?
Yeah, but I'm on the wrong device, so let me get on a different one.
I don't know if Tron was it more of like an airdrop? I mean, it's still taxable, however you slice and dice it. But
So it was a copy of the code base. Tron started out as a token on Ethereum, and then as they grew, they copied over the UTXO set. Or Ethereum doesn't have a UTXO set, but the balance of all the addresses copied the code base of Ethereum and made their own version of it. So that's at least the impression I have. As I say that, this could be one of those cases where I'm making up things and think I'm telling the truth. But I because I don't have a clear recollection of my source on that. But I do have a rather strong impression with vague citation or no citation that Tron is a fork of Ethereum. Of Ethereum's code base with the balances of at least the Tron addresses carried over to the new network. It may not be only the Tron addresses. They may have copied over the balances of all Ethereum addresses, but at least the Tron ones they did.
So in short, Mike, we have no idea, but just assume that Tron did, and it was a fork.
Yeah, but I think he was probably thinking about whether it forked and he had something coming to him from the fork.
Yeah, that's the biggest question. Yeah,
that's not the case. You didn't.
You're right, Rick. Don't worry about
There's
that.
no Ethereum fork where you have anything coming to you. So, but if I could,
I would look into the Tron thing and check if you have it. Plug your address into a Tron Explorer and see if you have anything in there, because that would. I mean, it's a quick thing to do, and I do have a vague recollection of something along those lines. So
okay, thank you very much. I just one other question. You said about lost coins. There's always a potential there. If maybe before the end of the session, when you could just talk about how to handle a lost coin.
Yeah. So I mean, really, if you can prove this is a tough part with the lost coins. I had a buddy who had a wallet that had, I don't know, maybe 50, 100 ETH in it. And he can get it. It was one of his smaller wallets at the time, and he had to declare it on his taxes. You just have to you have to have a burden of proof that you indeed have ownership of it and it is indeed gone. But I'm fairly certain that is a capital loss. I think based off of, you'll have to talk to a tax professional because I haven't run into this issue. So I can't speak to it firsthand. But I know it is some sort of tax benefit. I just don't know if it's at cost basis or at the time that it was lost, the value at the time of loss. I can't speak to that, and I'm not 100% on that. And that's why you talk to a tax professional. But I do know for a fact that you have to have, burden of proof that it is indeed lost, and there's no access to that funds anymore, and you did have ownership to it. But yeah, in all regards, it's just like losing, something of great value, right? And there's a way to have a write-off for it. I just don't know the nuances in that regards.
Can I step in here for just a minute?
Yeah. Go ahead, Rick.
Buddy, I do know an accountant in this area who is certified in crypto tax law. So if anybody's interested in or needs that type of, help, just send me a message in the meetup group or something like that, and I can hook you up.
Awesome.
Yeah, that's your best bet. Thank you. Was that Rick?
Yeah, that was me.
Yeah, that'd be great. Honestly, I mean, I could even, use that as well in the future too. So
yeah, just let me know. I mean, she's a friend of mine and she does really good. She did get certified in crypto tax law. So,
but the problem is, Rick, Shannon was only on here once.
well, that gives me a good segue then, because if anybody wants to see Shannon on a regular basis, or if anybody wants to talk about other coins besides Bitcoin, and believe me, I'm a Bitcoin maximalist too, but in a different way than Dan and Max. I think that Bitcoin is the big dog on the block, but I also believe it's okay to talk about what Max likes to call shit coins. So if anybody,
damn right I do.
If anybody wants to talk about altcoins without having to hear the word shit coin, you can come to a meetup group called Black Swamp Crypto, and that meets on Sunday nights. So just throwing that in there.
I'm bringing my 2 billion bags of Doge, so just wait.
Well, if you're still holding on to Doge right now after it ran up, you're crazy.
I had to buy some more, Rick. I had to buy 2 billion Doge. Are you kidding me? Come on, we got to stack that bag, baby. I get it. Please, God, don't buy any Doge. Anybody. Please, no. Don't. Just ignore it.
That was an attempt at a howl. I don't think it carried over well.
It carried over very, very well. Exactly what so much wow meant. Exactly. Much wow. I don't know if Super asked this question specifically. I think you already did, and I put it in the chat. Zach, can you reiterate how you account for your wallet-to-wallet transactions? Like if you actually want to do the full proper disclosure, did you say you use like a coin tracker or like bitcoin.tax or something?
Yeah. So any of these, like the 3 that I had listed, there's, like I said, there's more. These guys have built platforms that can, here, let me decrease that thing. Sorry about that. You go in and you upload all of your data into these files, right? Which for me, it's multiple sources, right? And I'll send stuff to a Mu, and then I'll take it out of my Mu and I'll put it on exchange, or, like basic attention. Yeah. Or I guess you say shit coins. But I trade a lot of shit coins, and I have traded a lot of shit coins. And I'll if bat's looking sexy, I'll rip it off and send it to an exchange and sell it. Or Doge, if I had any Doge, it's a meme coin, but like, I don't know if it was Rick or whoever said it, but sell that stuff now. Yeah, I track all that stuff and I consolidate it all down, and it's in different formats. Like I said, the format that Coinbase uses is different than the format that I had for Binance, which was different than Kraken. And it's typically in a CSV file format. And some of the stuff that you can't download, like, the stuff that, was it Super was talking about with the different wallets that he tried out, that stuff is maybe manual, but there's options for that in the software, and you can choose, oh yeah, I'm going to type in these 5 manual things, and I'm going to load this CSV file in.
That was going to be my follow-up question. I get that you can just export the whole CSV right over from all of your exchanges, and it aggregates, and it's great. But if I have a brand new wallet, I'm looking at my phone. I never played with it yet, but Blockstream's Aqua wallet. If I want to download Aqua and then play with that, I can manually input whatever wallet information that I can into bitcoin.tax or whatever you're using, just to account for where I received and therefore sent from, exchange, from Kraken to me back to Binance or something. Okay, so you can manually input that information.
That's correct. Yeah.
Nice. Okay.
Yeah,
thank you.
And a lot of wallets, especially by larger companies or companies that have a lot of employees who have to deal with this stuff, they make it easy to export a CSV file of your transactions. You don't have to do it entirely manually.
Yeah.
I don't know
Yeah.
if Blockstream does that, but they're a big company who employs people in this space. I would assume that'd be one of the things just their employees would want, is a way to export that stuff. So maybe look into it, check a few forums, see, Google how to export my transactions from, Blockstream Green. I know that
Yeah.
Electrum keeps a spreadsheet of that stuff and makes it easy to export or even copy paste because they put it right in the interface. LND has that where you can export all your transactions. Sea Lightning has that. Those are some that I've used. But like I said, I experiment with a lot of wallets, and many of them don't have that feature.
Yeah.
So there's that as well that I just estimate.
And was that super?
Yes.
That's a really good.
Me.
That's a really good point, and to add to that is the IRS is working with all of these guys, right? I mean, if they're going to these different events, they're talking to different people, they're bringing people in. A lot of the times, it's bringing people in, maybe behind closed doors, but they're in conversation with all of these different wallets, all these different like Zen Ledger, Coin Tracker. They're consolidating all that information. So I think it's a really valid point there, Super, that they're formatting it for specific purposes, right? They're trying to make it easy.
Right. Yeah, and I just think of it from the perspective of if you're an employee who's working on this stuff and you're like, wow, all these test transactions I made, I need to report, our company needs to report this stuff. The company's going to want to have an easy way to do that. That's going to be immediately on their mind. They could be like, oh yeah, we need to do this. And then they'd be like, yeah, why don't we make it so that anyone can do that? At least that's how I would think they would do. It'd just be natural for them because otherwise they would go out of business due to not reporting their transactions. So
that's correct.
There
yeah.
you go.
Yeah. Being a Bitcoin business and accepting, paying for your expenses in Bitcoin. It is interesting. If it's fine to do it at like a hobbyist level, if you're just like selling stuff, but if you really want to scale up appropriately, you have to keep track of every single UTXO. And I'm sure Blockstream has a whole team. Well, not a whole team, because I know Rusty Russell and who's the other guy working on Sea Lightning. There's only two people. Oh my god, I have his. Oh my gosh, I have his picture right in my freaking brain. But there's only two guys working on, minus the contributors. Info Tron. Okay, it was an airdrop. Tron was sorry, I was distracted by the chat. Super,
Yeah,
they brought it in. It was
over,
an airdrop.
Yes, they did do an airdrop, and not only to the people who already had Tron tokens, they did an airdrop to all existing Ethereum users. So if you had Tron or if you had Ethereum at the time, and it was in your own wallet rather than a custodial wallet, you got a certain amount of Tron coins. It appears it was not what I suspected, which was that they copied over any balance and then gave you an equivalent amount of Tron. It looks like instead of doing that, they airdropped like a fixed amount to each Ethereum address that had been active in the previous year. More details are in that thing. I'm not going to go explore the article thoroughly, but if you're interested, yeah, I think checking out if you got anything from the Tron fork / airdrop would be critical, because airdrops count the same way as forks as far as being a taxable event.
Yeah.
Very, very interesting. So I have a question, because you have it on the screen right now, and it goes towards network fees. Here you have it listed as gas fees, and that's what Ethereum uses.
It's ETH, yeah. Sorry.
Yeah. No, not a big deal. But I'm curious, what happens when? Okay, for example, if I can get a 1 sat per byte transaction sent, right, and confirmed, that only costs me 300 sats. 300 Satoshis is not yet 1 penny. Okay, so how would I track for sub penny, movements? And I guess a follow-up question to that is, let's move up to the second layer and go back to last week or 2 weeks ago when we had Justifer on. Justifer is a Lightning routing node, so he is buying and selling daily inbound and outbound liquidity, 50, 60 times a day. And it's micro payments, it's 40,000 sats here. It's 200 sats here. Again, I understand we can export that file and it's all good and dandy, but when you get to a line and a bulk of everything is, let's say the past 75 transactions is all sub 1 penny. Is it worth it to account for it? Is it even, I know it's worth it to account for it, but does it show up on your taxes? Meaning you actually see the number that you get deducted? Like, is it meaningful enough, or is it it's just a part of what you got to do? You just
you don't have to. So the thing with gas fees or whatever you want to call it, you don't have to, right? That's just your benefit. So it just behooves you.
Yeah, I'm just saying I want to suck out every benefit that I can. So is it worth it for me to say, oh, geez, I got 600 one sat routing fees here, so it's not, I got to account for 600 individual one sat
No.
incomes, right? Is it worth it?
Absolutely not, right? Your time value of money at that point is not worth it. But with some of the higher transaction fees that we're seeing, it's it may be substantial. So
it seems, so basically with your, again, I'm not holding your feet to the fire on any of this, but it just seems like with that answer, it's like, well, great, then just do subset, or not sub, well, you can't do subset, but just do sub penny transactions and you're good to go. I know how stupid that sounds, but it's like if you're doing lightning routing and you're only routing, or okay, Super is a market maker on Join Market. If you're only doing, I'm making it up, 1,000 sats per week, is it even worth it to account for that, right?
I don't think you have to. You don't have to account for it. The main thing is your income, right? That's an expense. So it's only a benefit to the taxpayer at that point. But what I would recommend, and if you haven't done it before, I think the HODL mentality is good. But there are, for instance, last bull run, right? The last bull run for crypto and subsequent bull runs, crypto or Bitcoin, I'll just use Bitcoin, in general, touched the 200-day moving average about 8 to 9 times, right? If you're willing to hold all the way down to your 200-day moving average, which right now is around $20,000, right? Right now we're overbought on weekly, daily, for on every time frame. I'm short right now. I have a short on Bitcoin, as a disclosure, but it potentially the parabolic run for this, right? If you do a statistical parabola on a logarithmic scale, it's about $100,000, right? But we've only hit the 200-day one time statistically. And the biggest thing is guess who's in the game now? Hedge funds, big money only cares about making money. So mean reversion becomes a greater thing as bigger market players come in. So undoubtedly, we're probably going to go back to mean reversion, right? A stronger mean reversion curve. And it's going to go back to the 200-day more frequently. My thought would be, if we go down to $20,000, sell it and then buy it right back.
Because then you can claim that loss if you bought it at 45 or whatever number, and then you can take that tax gain on your whatever capital loss you incurred, and thus now you rebuy back at whatever number you buy back.
I have a question about that. Oh, I'm on the wrong device again. Hang on. Somebody else say something.
Yeah, you're there.
Now we're there. I think, there we go.
Okay, I'm back. If you wanted to do a purchase of Bitcoin and if you wanted to sell your Bitcoin at the drop, when we drop down 50%, and buy back at the same moment, would it be feasible to say you bought some let's say you transferred your Bitcoins from Bitcoin base layer to the Lightning layer in some sort of a swap with somebody? Would that count as selling your base layer Bitcoins in order to get second layer Bitcoins, or does it, since it's the same asset, does it not qualify?
That's actually a really good question, and honestly, all I know at this time that is clarified is if you trade a crypto for crypto, or if you trade a crypto for fiat, that is what would be classified as that event. So my thought would be is you probably have to fall in that category, and it's so easy to do. Why not do it instead of trying to play with a gray area? But if that gets clarified, that's a really great idea, right? But my thought on that would be, well, we know what the tax law clearly states, right? And that's, I mean, you're getting onto a whole nother level, right? um, but
well, I'm just trying to think. I don't want to give up those bitcoins during that 5 seconds, and during that 5 seconds, they rocket back up 50%. You know, so I'd like to keep the exposure while I quote unquote sell for some other asset. But I'm not sure if there's a really decent way to do that, because Lightning's the same asset. It's not a different asset in that case.
Yeah, it would have to be a different asset. But honestly, at least the way it's worded now, we know that it doesn't go up 50% in 5 minutes. Most of the time, you would sell on a down. I don't have to hit the bottom. I don't have to sell it directly at the bottom. But I'm big into technical analysis, and I got buddies that do a lot of like trading bots, and my buddy was creating this thing called the yin yang bot. So I mean, all this stuff, as it gets larger and larger in scale, I mean, look at the equities market. It's 45% passive right now, which is like Vanguard, right? That buys indiscriminate value. That's why you have PE ratios that are through the roof, and buyers are still there, because 45% of market's passive. You're going to see passive buying happening in crypto as it gets added to these larger market spaces. So my thought would be is you're probably going to come to a more a less manipulated, more statistically based trading flow. And again, most of this stuff and transactions, you look at if you go to Binance, that's not people. A lot of that volume is bots. I know bots that do many transactions a second, right?
My best friend is a bot. Wait,
yeah,
I gave away too much.
Yeah, so it's major flows, right? So I mean, at the end of the day, I think it would behoove anybody if it drops 20% to just sell and buy within a 5-minute period, and harvest that tax, and that carries over literally indefinitely on your taxes. If you decide not to sell anything for capital gains that year, you at least get to apply $3,000 to your income. And this is a unique case. I mean, it may not be that way forever, but the wash sale rule doesn't apply like equities. So, there are things that we can do as not tax accounting professionals that we can leverage now. So, I would just recommend stuff like that.
Are there exchanges that let you do something where your sell only triggers when a buy of an equivalent amount occurs, or something of that nature?
I mean, you have stop losses, and you can have set buys. Honestly, what I do, this is just personally, I'll put an idea in my mind. Like, I'll typically look at a specific moving average, and I'll say, all right, I'm not going to sell unless it hits that. And if it hits it, I'll probably sell there and then just buy back. But that I'm controlling that or managing that. I don't know if there's any specific like tool that would allow you to do it. There may be.
So is it literally it's important to me because I have a very emotional attachment to my bitcoins and have a hard time giving them up for any amount of time. So I'm wondering, this is why I'm asking such a granular question. Is the amount of time that you give up the custody of your bitcoins, at least in terms of on exchange custody, your paper bitcoins, is the only time you give up your claim on those between the moment when you hit sell and the moment when you re-click buy? Like, does it literally take less than a second?
Yeah, it really is. What you're saying is, like, does the block have, like you were talking about, does the transaction fully have to be done on chain? Is that your question?
No,
like or are you just talking about
that too?
Yeah, I mean, that's
I'm
one question that I always have. Sorry, Super, go ahead.
I apologize about the delay that causes me to keep on talking over you, but I'm not trying to. The thing I'm really asking, I assume it doesn't need to be on the blockchain, but if I'm wrong about that, feel free to clarify. But what I'm really asking is, if I go onto Coinbase right now, there's a buy and a sell button, right, on Coinbase Pro, for example. And if I send one full Bitcoin there and click sell, and I haven't done that. I've never sold Bitcoin on Coinbase Pro, at least. Well, that's not entirely true, but I don't remember what it's like anyway. I assume that the moment you hit sell, it takes less than a millisecond, and you have the amount transfers from being, one full Bitcoin to being $44,000 is in your account now. And if in that 1 millisecond, if I after that 1 millisecond, if I cover my coin over to or cursor over to the buy button and click again, I assume that $44,000 minus whatever limit fee they're going to take is going to return back into my wallet. Does that qualify as for what you're talking about, for getting the crypto tax harvesting gain, or does it have to be on there for a certain amount of time? Does it have to be out of my custody for a certain amount of time in order to count?
Gotcha. That is. Thank you for clarifying the question. The answer is yes. That counts as a tax harvesting event. It works, 1-for-1. You sell it, you buy it, it's done. That's on your CSV printout that you get from Coinbase, and you can declare that as a capital loss. And there's no vesting period. That's that wash sale rule. With equities, it's 30 days. So let's say that you sold that Bitcoin. If you buy back that Bitcoin within a 30-day period, it doesn't count as tax harvesting. With crypto, it does count. You can count that as tax harvesting.
So if I bought MicroStrategies on January 1st and it dropped by 20% and I sold it, and then I immediately bought it back, I would have to wait 30 days after that initial sell in equities. Did I hear you correctly, or am I
no? So if you have an equity, right, and you sell it, you cannot. If you buy that equity back the next minute or whatever, there's no tax harvesting event.
Yes. Okay. So yeah. So I did hear you correctly. I do have to. Yeah. I bought it.
The rule is different for commodities then.
Yeah, exactly. There's a difference between equities and commodities, and the entire basket of crypto, if you will, is deemed as a commodity. Technically, not all of them, of course. Don't take me on that, but I know Bitcoin is specifically called a commodity, but it goes either way. So, okay, thank you for answering that.
Yeah, and obviously you can work with a tax professional, but as of what I know now, based off of my taxes, that is something you can do. So yeah.
that kind of goes into a second point, though, about all of the Elon stuff that he's been kind of saying. We know his tweets have gotten him in hot water with the SEC several times, by Tesla shares back at $420, whatever. But what I think we're finding, this is more of a comment / question towards that response, but I think we're finding most of these big players can now influence this price of whatever underlying asset because it's classified as a commodity, right? And so technically speaking, you're not doing any market manipulation on equities and on ownership. So you could, okay, so exactly what Elon Musk has done. Dogecoin, put Bitcoin in your profile and stuff. You're just pumping the price. We know this. You're pumping the price, and then now they announced the $1.5 billion, purchase. Is that? I guess my comment / question is that market manipulation, or does it not count because it is a commodity?
No, it's pervasive. I mean, quite frankly, I work in the auto industry. That's my trade. I've worked with autonomous driving, steering gearboxes, ISO 26262 stuff. From like an auto perspective, I've done quotes with Tesla, like RFQs and stuff like that, for specific parts. What he's doing and what he did with crypto, I think, is fundamentally bad. I mean, he's ultimately shilling, I feel like. And I don't think it's very beneficial for the space. I mean, if you look at Tesla, their PE ratio is over 1,700. I mean, Schiller PE ratio is typically around 16, right? And I know Schiller did an adjusted price to earnings ratio, but ultimately, I mean, what Tesla did, I mean, they have so much overvaluation that 1.5 billion is nothing, right? And now you're tying Tesla to Bitcoin, like Musk and his madness to Bitcoin or Doge or whatever. I mean, I don't necessarily see. Yeah, maybe Bitcoin gets some exposure, but then it's going to be the crash, right? Inevitably, we're way overbought right now, and we know crypto cycles. It's going to fall down, and it causes a lot more heat. Who knows? Maybe it'll go in tandem with Tesla, and then Tesla gets tied into some sort of scuttlebutt. I think it takes away from the fundamentals of why Bitcoin exists, right? It's becoming so corporate and so, I mean, it's just a part of the system that it was created to go kind of against. And, now that Musk is involved, I don't know. I think it's total shilling. And I think a lot of people are going to get burnt and they're going to sell. They're going to sell low. They're buying high and selling low. And maybe it'll go up to 100K if it follows the current parabola or the logarithmic scale. But who knows? That may take a couple years. But I think he's setting people up to get burnt. I can't tell you how many people I know through my buddy at work. All of his buddies have bought Doge now. Right?
I know a couple people that have asked me, they're like, Max, how do I buy Doge right now? And I say, don't touch Doge, buy some Bitcoin. Doge is pumping hard. I'm like, what do you do?
This is what my coworker told me 2 days ago, right? He goes, yeah, I heard price targets for Doge is in the dollars. What on earth? What on the literal?
Can confirm. I also experienced Doge buzz. Oh, on the wrong device again.
Yeah. See. Yeah. There you go.
I mean, that's to me, that's sick, and it destroys the fundamentals. Like we got into Bitcoin for a different reason, right? And now it's being audited and monitored and controlled, and ultimately, I think with the World Economic Forum and the International Monetary Fund and whatnot, and with all the big countries stockpiling precious metals right now, I wouldn't be surprised if there was some sort of try for usurpation of the Bitcoin community. I mean, 88% of Bitcoin's mined, right? And I believe a majority of it is China held. So as a lot of economists say, as Bitcoin becomes more material, I think we're going to see some volatility that, we haven't seen in some time. And I think there's a lot of people that have gotten shilled in, and they're going to get burnt. And we're going to have a whole nother cycle again. But it's funny that you bring up Musk and the Bitcoin escapades coming from the most overvalued company right now.
Well, I don't know if I mentioned this to you or if I just saw it and did my own mental note, but when MicroStrategy, I get it, different time, different place, different setting, but MicroStrategy buys Bitcoin and the stock just shoots through the roof. And we finally today had a pullback of like 20% after a ridiculous run from like 150 to like 1,200. Eric, I know you're holding on to that bag, baby. Keep holding on strong. I know you got MicroStrategies. But when you saw Elon buy Bitcoin on Tesla's balance sheet, the stock only went up 2%. To me, that signals that, whoa, are these people overvalued? Because Bitcoin is the hottest commodity on the market as of right now. So if it was actually relatively valued, it should have pumped like 15, 20%, according to everything else, all things aside. But we got a tremendous amount of room, I think, to run. But it is interesting to see who's going to actually be buying on the corporate balance sheet large. I know the next we're hearing is going to be maybe Oracle, Larry Ellison. And it kind of makes sense. He left California along with Elon, and they're now in Texas doing all their stuff. I know a couple guys over at Real Vision. I talk to them, not often, but on a very sparse occasion. And they said there are some very massive, mind-blowing public companies that will be putting Bitcoin on their balance sheets in this first quarter. And that was before the Tesla announcement. So I guess that's one domino to fall. I would love to see another. Is it Oracle? I doubt it's Apple. It could be Microsoft or Alphabet. I doubt it's Facebook. Mark's too greedy to make his own coin. So I'm just curious who else is going to be the next wave. And kind of bust through these regulatory issues. Come on, Michael Saylor is doing a complete attack on the U.S. dollar right now by borrowing money. Not only did he liquidate all of his dollars, he borrowed another $500 million. It was oversubscribed for $600 million. Okay, and he's going on live TV and telling him, no, don't worry. Bitcoin's not going to replace the U.S. dollar. No, we're still going to need a U.S. dollar. What a genius man! He's clearly attacking the U.S. dollar, but then going right on the screen and saying, no, don't worry about it. We're not going to pass the U.S. dollar, but Bitcoin might hit a couple $1 trillion. Come time. I mean, eventually these guys have got to catch on and say, you're sucking out our money velocity. We got to shut this off.
Yeah, I think Max, maybe sometime, since some of us trade and are interested in price action, we should do another one of these on maybe that realm of things, valuation, and that'd be kind of cool to discuss and get other people's ideas on.
On that note, I am going to end the recording here, but we can still keep talking and discussing. I just wanted to get a good amount of Q&A to put up on the YouTube. I apologize. I completely forgot to put up the Q&A of last week, so I will do that first before I do this. So again, Zach, thank you very much. Guys, stay on. I'm going to keep rolling with this, and we will go from